You're still with us on Reporter's Diary. The Indian IT sector can see outsourcing contracts worth over $43 billion coming their way in FY20. This as per data exclusively sourced by CNBC TV18 from the Everest Group. Kritika Saxena joins us now. Kritika, what else are you picking up? Also, share with us the details of who the largest renewal deal customers are.
You know, we don't see as many incremental new deals coming in, but you know, when you see deal renewals, you actually see the large traditional deals. So this time around, what we understand from the Everest Group, deals worth $43.4 billion are up for renewal in the period 2019-2020. So FY20 is the period when we're expecting them to come in. The bidding should start either soon or in a couple of months' time. Now, if you break it up, from the government sector, it's about 50% of these deals. 20% of these deals are from the BFSI sector, that is the banking and financial services, and tech and communication comprise about 10% of these renewal deals, and the remaining in allied sector. If you break it up further into geographies, as expected, US comprises about 38% of these renewals, 25% coming from UK. Interestingly, India is among the top three amongst these IT deal renewals, so 8% coming in from India. Now, you asked for specifics. We have been able to get some of the larger deals that are expected to be renewed very soon. So that includes, and the largest coming in, interestingly, from Zurich Insurance Group, worth $4 billion for infra services, app development, maintenance. Bharti Airtel's $2 billion contracts for app development, maintenance and infrastructure also coming up for renewal very soon at that. Saudi Telecom is about to renew contracts for $2 billion for BPO service, and from now there's a lot of BPO services coming up. I would imagine that's because BPO services is about a 10-year contract, all of them coming to an end right now. So Sanofi is $1 billion worth of contracts for BPO services. Resolution Life Group, again, $1 billion for BPO services, and a slightly smaller, not too small, but a comparatively smaller deal from Swiss Re for BPO and insurance platforms. So as you can see, and if you look at the larger deals also, it's coming in from insurance, it's coming in from telecom, from tech space. And as the months progress, we should have some more clarity on the specific deals coming in from the government space. And that's where you'll actually see the big bucks coming in.
Absolutely, Kritika. Thank you so much for taking us through those details. Now, moving on to a CNBC TV18 exclusive. Reliance Jio and Reliance Communications have written a letter to the telecom department seeking a nod for their spectrum trading deal. Reliance Jio has told the telecom department that it wants to go ahead with the agreement with Reliance Communications. In fact, it has requested the DoT to clarify its position on the spectrum deal. Jio mentioned in its letter that both the Supreme Court and the Telecom Appellate Tribunal have already rejected the telecom department's plea for bank guarantees from Reliance Communications. Remember, Jio and Reliance Communications have already extended the validity of the asset sale pact to June 28, 2019. Standard disclaimer flashing on your screen. Reliance Jio is owned by Reliance Industries, which controls Network 18, which owns the channel that you are watching. There could be some relief for large online retailers like Amazon and Flipkart. Days after issuing a new circular on FDI rules, the government has clarified that there is no ban on the sale of any private labels by marketplaces. Companies like Amazon and Flipkart own about 30 brands, and there was confusion over selling them on their platforms after these new rules. Priya Sheth is here with the details. Priya, take us through the clarification, and how big of a relief is this for the marketplace?
Well, absolutely. Following the confusion surrounding the recent changes in the FDI policy on e-commerce, the DIPP has clarified on several counts. The government has reiterated the policy provisions to ensure better implementation of the policy in letter and spirit. Over the last couple of months, the government has continued to receive complaints on policy violation, and therefore the need for intervention has been mainly to ensure that the rules are not circumvented. The biggest relief that comes in is from the clarification for private labels. Now, the government has said that the present policy does not impose any restrictions on the nature of products sold on a marketplace. Therefore, players like Flipkart and Amazon get about 15% of their business from private labels. This is a big positive for them. Business strategy, investments, as well as supply chain have been modeled based on the growth of these private labels. So, therefore, these are also high margin categories for several of these e-commerce players. And with the government tightening screws around exclusive deals, discounting, and equity participation of online players and entities through the December circular, it raises questions around the sale of private brands as well, which has been clarified as a part of this circular. Other concerns are also expected to be addressed by players going forward, so that's a space that we will continue to track.
All right, Priya, thank you so much for those details. Now, a day after media reports came out saying that the government has stopped printing 2,000 rupee notes, Economic Affairs Secretary Subhash Chandra Garg has issued a clarification. He tweeted, and I quote, "Printing of notes is planned as per the projected requirement. We have more than adequate notes of 2,000 rupees in the system, with over 35% of these notes by value in circulation being of 2,000 rupee notes. There has been no decision regarding the 2,000 rupee note production recently." End of quote. So essentially, the government saying that there is adequate 2,000 rupee notes in the system and we do not need any more at this point of time. As of March last year, 2,000 rupee notes accounted for more than 37% of the total currency in circulation by value. Nearly 43% of the currency in circulation are 500 rupee notes, and the remaining 20% or so is currencies of other smaller denominations.